At the institutional equity desk in HDFC Securities, frankly, we were looking forward to a revolutionary budget of sorts. And I think we got a little carried away in assuming that this budget would be a game changer. We retain our faith in the government and a broader, longer-term direction of reforms, fiscal consolidation, better governance, and an automatically implied improving growth trajectory and hence bullishness for the stock market. But on this particular budget, I must say that the takes are only incremental. It should serve the country well, no doubt about that, even as it makes smaller changes, and I think the devil is in the details here. For example, we are looking at fiscal consolidation, but it's going to happen at a slower pace than what we thought, and which I think is not a bad thing given the fact that economic growth does require, even at the current point of time, a careful withdrawal by the government in terms of spending. Second, the thrust on infrastructure is still visible, and it's likely to persist over the next 3, 4 or 5 years of this government's tenure. Three, the steady, strong and indeed admirable evolution of the financial sector will continue. There are lots of announcements about increasing financial services reach to the far-flung corners of the country, and this bodes well for the entire sector as it brings a lot more people into the financial system. The increased reach and efficacy with which subsidies will now reach the people for whom they are meant through the Aadhaar system by extending the coverage from 1 crore to 10 crore people means that this government is fully focused on effectiveness of governance and delivery of government services to the parts of the economy and to the people in the economy who most need it. Net, it's a very constructive budget, but there are no big bang reforms. Most of the directions and the intent of the government remain unchanged, and we should exactly be in the same mood that we were yesterday, and we shouldn't change our mood with regard to the country just because of this particular budget. For those of us who were expecting big bang reforms, surely there is room to be disappointed, and I think insofar as stock markets are concerned, it might well offer opportunities for the real long-term India bulls to buy. Specifically, the proposals related to, for example, the merger of FMC and SEBI will have a positive impact for the business of MCX, an exchanges company, a commodities exchange promoter that we covered recently and did extensive research on. We believe this is just the beginning of good times for MCX, and this is certainly an idea worth considering for long-term investors, despite the run-up today, I must confess. Second, the very specific details of how the FDI and FPI limits for companies are going to be merged and subsumed and how this will play out is not very clear. But in general, I think the implication for private sector banks as well as for any company where FDI and FPI limits are separately specified will certainly be positive. We saw Axis Bank run up on this count today. Finally, I believe the one bad piece of news in the budget was the increase in excise duty on cigarettes, 25% for smaller cigarettes and 15% for longer lengths over 69 or 70 mm, I think. That certainly bodes badly for ITC, and the stock reacted appropriately. Once again, I would say that on ITC, it retains very high pricing power, but now I think the cumulative impact of recent tax increases might just get a little too much for the company to bear in terms of near-term performance. Demographics remains to the advantage of ITC, although I think smoking as a habit is becoming less fashionable for India's youth. So we'll have to see how this one plays out. I'm not sure how ITC will manage to get out of today's crack. Although we were constructive on it from a longer term perspective, we will certainly have to revisit this story and look for details. Net, I would say that the budget, I repeat, has not been a big bang budget. There are lots and lots of incremental details and takes which we'll have to do a deep dive into to figure out whether the impacts are going to be positive or negative. But the overarching sense is extremely constructive, and we would say that this is a budget now to take us forward to the next level as an economy.